We are live. I need a soundboard, bro. I need some official shit to press.
All right. I think the best idea and the best comment so far is Arlie. Probably a good idea to DCA into cash. I think.
Yo, that's an epic line. I am
That's
currently imagine that's your Twitter bio. I DCA into cash.
that should be a shirt, by the way.
That should be a
Like
shirt.
DCA into cash.
Shout out to 96 people here in 30 seconds. Thank you so much for being here. Appreciate it. Means the entire world to us. I don't know if Carlos is going to be here tonight. He might have some more daddy duties. We'll see. Chris will probably be here. He's just
I don't think anyone's coming tonight. Like, and I'm logging off in 10 minutes.
Chris is probably pinching one out. That's probably what's happening.
Yeah. Oh, you stole my joke. I was going to say I
stole your
pinch
joke.
one out. Yeah. If you guys don't know what pinching one out, that doesn't mean masturbating.
Yes, it means on the toilet. That's what it means.
Yeah.
I want to acknowledge some comments real quick. Mike Hunt, Midwest, Arlie's, Mario, Ahad. Arlie, what's for dinner? Yeah, Vitaly, what'd you have for dinner for today?
At Jersey City, I pick up a delicious Cuban/Spanish food, whatever it is, and brought it home. That's what we had.
Okay, very good, very good, nice. Arlie, why are New Yorkers always late? You know, it said 10:05, guys. They didn't say 10 p.m. Like, give us that 5 minutes a little bit, because me and Vitaly talk about our dreams and goals and ambitions for 5 minutes before we go live. So that's why they give us that time. No, we don't. We just fuck around with each other.
We were actually talking smack about another YouTuber.
No. One day maybe that comes up live. Matt Money, what's up? Thank you for being here. Appreciate you, Kane Frost, Evan, Iceman, JJ. Bunch of people there. Namir says, Amit looking like a Crip. That's hilarious, bro. No one's acknowledged this yet. I was waiting for you guys to acknowledge it.
Oh yeah, I was like, whatever, artists.
It's just like this fucking 25-year-old wearing a scarf right now.
Yo, your mic sucks. I don't know. Do you have that on or no? I should have mentioned that earlier.
Fuck yeah! Why didn't you mention that? Boom.
Am I in the Upper West Side? No, I don't live in Manhattan. I don't know why he's mentioning Upper West Side. I live in Jersey, but yes, I do go into the city for my job.
All right. I got my mic. And Namir said, Amit, don't ask me girls about my IG. You're going to get me in trouble. Bro, Namir, so I followed this guy on IG yesterday. He posted some picture with him and this white girl from Coachella. And I couldn't really see her face or anything, but she looked kind of cute. I was like, who's this chick? And he didn't answer my question. So, Namir, I'm going to get you in trouble. This is fun. I like following you guys on Instagram and on other platforms. It's fun to see your actual lives. All right. We've got a lot to talk about. The first announcement I want to make today is that every comment on the podcast, I can't say how many of them, have been asking for timestamps. So what we are going to do, because I can't watch the pod after it's done, is I'm going to make timestamps in real time, but I need some of your help, okay? So we're about to get into our first topic, which is the title of the pod, what Kris sold out of. I'm going to look at the time as soon as I begin that topic. So let's say we start at 4 minutes. From up till 4 minutes, I will say that's the intro of the pod. That'll be a timestamp. Then 4 minutes will be XYZ topic. Once I transition, I will try to.
Oh my God, we don't need an explanation.
No, wait, let me explain. This is why I need people's help. Once I transition, I will be conscious enough to try to look at the time. If I don't, and someone in the chat recognizes, oh, we're transitioning to forward earnings, just put the word timestamp in the chat. And as soon as I see that, boom, I'm going to look at the time, and it'll be almost perfect to the actual timestamp. So this is a collective effort we need to do for the broader, about 2,500 people that watch this after the pod is posted, so that they can get to the right topic at the right time. So that's
bro, what's with this clickbait article? I didn't sell out of a lot of stuff. I just sold out.
No, I said Kris sold out of all of it being one thing. And
okay, which is not 100% true either, but okay.
All right, well, this is what we got to explain, because on Twitter, it sounded like what you... All right, so this is the first topic of the day. It's 4:11. That's the timestamp. Boom, here we go. Christopher Patel, you tweeted you sold out of something today. Can you explain what you sold out of, why you sold out of it, how much did you sell out of it, and what you bought with the thing that you sold out of?
So I still have shares of Meta, but I sold out of all my options on Meta. So I did take some profits last week and the week before that, because there was just really good profits.
I thought you already did that. Yeah, you mentioned you did that before. So
yeah, no, I still had a little bit here and there, just riding just to see where it would go.
So to confirm, today you got rid of all the Leap contracts, but you still have shares, correct?
Yeah, I still have some shares. So in my longer term portfolio with just shares, I have some. But here's the kicker with it. I ended up buying some Amazon with it because I ended up converted a lot of those leaps to Amazon leaps because the pricing on the Amazon leaps I think is undervalued.
Which ones? What strikes? Well,
The
give us some specifics.
The 2025
Yep.
calls,
Yep.
20, what is it, 135 and 165 on the other side. So, yep.
Oh,
yep, yep.
you strictly do spreads. You don't actually do.
No, I do regular calls as well. It just depends on like what the market is like. Like I think at 165 it could be a little bit overvalued. At 135 it's super undervalued. So in Amazon's case, the premium on the top line was too good. If let's say I'm looking at Meta, I bought the Meta ones naked when I first got them because that was just like there is no upside cap to Meta where it was going to go. Like you couldn't tell, right? So you can always do the latter and sell some of those, sell some later, right?
Yep.
And then which case you could just create the spread later on. But yeah, just I think that was it. I have some call contracts on.
Can you explain
SMCI, which I'm
why
holding.
you sold Meta? Like, can you like why did the options leave today? Like, what was is
Okay.
it just valuation or is there something else?
Well, yeah, the valuation. So when it was really, really undervalued, it made a lot of sense.
Yep.
At this point, Meta, what happens is when it's undervalued, it's much easier to go higher because you can make some business opportunity changes and everything else to get it higher. Now, Meta's got to organically do more and more and more. And the return that you're going to see is going to be a lot more limited upside. Whereas Amazon is now getting in the phase like Meta was, where they're actually doing cost rationalization. So you kind of want to be in this kind of market. You want to be on the one that has the better upside, especially with the numbers not really being reflected on Amazon's what is that thing called, like share price yet. That's the biggest thing. Like if you look at what the share price of Amazon is, it's trading around its 2020 levels when it was half the revenue. So
Yeah.
a lot of the stuff that they have, their capex and everything else that they're cutting. Like every day I'm looking at the news, every time I'm analyzing, I just see capex cuts, opex cuts. They're reducing down their human resources count, which means that they're further reducing other things. They have an RTO in place, return to office place. So you're going to see a lot of employees come. I think that that's being used as a way to push attrition for certain people that don't necessarily want to work or don't necessarily want to be part of a more broader cultural shift that Amazon is undergoing. I know a lot of people are going to hate me for this, but I'll be honest. I think some tech companies have had bloated employee bases where they've been hired during the COVID crisis and maybe a little bit before then, and they've gotten so used to work from home and their productivity is gone down significantly. And when you have that productivity drop, at the ground level, everyone's like, no, we don't want to come to work. Like, I don't want to take the train to work, which is good. Like some people can work from home. I totally think that it's possible. But if you think the vast majority of people can work from home and be as productive as they are when they're cross collaborating in the office, it's a different thing. So Amazon, and they know it, they see the metrics. Every executive on Wall Street, every executive on Silicon Valley right now is trying to figure out ways to bring their workers back to the office, and Amazon seems to be leading the way.
There was also some other stuff on Meta real quick. So the FTC came out with something on Meta today. And basically they said, to my understanding of it, you can't use data from teens, meaning people, I think under 15 or 16 or whatever, and use it to monetize. Essentially, that's like, that was the extent of something they said. I might be getting it wrong, but it was something that was not good for Meta. Meta says this is a political stunt. Despite 3 years of continual engagement with the FTC around our agreement, they provided no opportunity to discuss this new, totally unprecedented theory. Let's be clear about what they're trying to do: usurp the authority of Congress to set industry-wide standards and instead single out one American company while allowing Chinese companies like TikTok to operate without constraint. FTC Chair Lina Khan has a very interesting on using any measure, however baseless, to antagonize American business has reached a new low. We have spent vast resources building and implementing an industry-leading privacy program under the terms of our FTC agreement. We will vigorously fight this action and expect to prevail. Is this another part of a bear thesis while the stock is at this valuation to really not get into Meta right now, given what the FTC is saying?
I don't think so. I think these are the kinds of things that are just going to keep coming around. This is like this, who's celebrating right now? Meta's lawyers. Meta's lawyers' fees just went up fivefold because now they're all Meta's going to do is just fight this. This is how Congress, the government works. The government comes up with legislation, the industry fights back, and then they come to some sort of compromise. Then the industry knows how to get around the compromise, and then it's like another 5-year cycle of the bullshit. If the FTC didn't do stuff like this, they wouldn't have a job. So they need to keep their presence up there. Like, look, we're doing something. So
Why wouldn't they have a job? Isn't there other stuff they can regulate?
No, I mean, this is what they need. They need high profile, like articles. Like no one is going to say, oh my God, we need the FTC because they protected us against, I don't know, something really small. Everyone sees the headlines. Like the fact that we're talking about it right now is what the FTC wants. They want to be in the forefront of it, especially after the fallout of what is that thing called? FTX and all the other stuff, which clearly they were fucking sleeping at the wheel. Think about it. Your job is to protect the consumer. Where the fuck were you when all this shit happened? You weren't around, were you? So now they got to go after some big fish to get their credibility back, and that's all it is.
Okay.
I'm sure Meta's lawyers and lobbyists are working overtime to figure out how to dead this thing.
Vitaly, any thoughts on or did you sell out of your calls as well? Did you or you
I actually did sell my calls, and I did buy. This is earlier though, not today, and bought Amazon options instead. But as far as my shares, I'm not selling. I still have a very, very decent sized core position in Meta. And if my thesis is that they're going to make this metaverse, this is a long thesis. So I'm not willing to trade in and out of a stock like this because, like I agree with Kris that temporarily Amazon might have more upside. I agree with that part. That's why I sold the calls. But in terms of my shares, I think Meta still has a long runway in terms of the ad business itself. When we talked even on our Discord about WhatsApp, how they're growing that side of the business. So the fact that Kris sells out of everything, basically, anytime he doesn't see as much upside, for me, it's like I also keep stuff. Maybe you're in a tax advantage account. I don't know if it's an IRA. I don't want to keep trading out of positions that I actually believe in long term, because all I'm doing is creating tax consequences, and then I have to wait until it drops 20-30%, and that might not happen exactly, and I might not be able to time that perfectly. Having said that, I do want to share. Should I share a chart on Meta for a second?
Go ahead. Let's share your chart, and then after that, we're going to talk about regional banks starting to collapse at a unprecedented level. 2 of them today. Kelly says, "Amit, please fix everything about your look today."
She's right. you totally don't match, sort of. You're all over the place.
She'll be on the pod tomorrow. She can tell me.
It doesn't even go with your fake brick wall. It doesn't.
Everyone come tomorrow because Kelly was on the pod, so don't forget. She'll be here.
Yeah. I'm looking forward to Kelly on the pod. Maybe we can, wink at each other. So right now, if you're a trader, then I could see you can look, we hit resistance here at 247 or so. And we also gapped up. You guys see this little part here?
Yep.
I don't know how clear it is, but we gapped up. So maybe we'll fill that gap. I don't know. I don't really believe in every single gap being filled, but that's a big thing in the market. So we might be heading back down to 218 around. This is what I mean. Let's say I sold out at 240. Now I have to time that it's going to happen to 218, 19. Then I have a tax implication. Maybe it doesn't happen. Maybe I'll get some FOMO. I don't want to do any of that. So because I'm looking at a bigger trend, that if Meta is fixing its house and just the ad business, forget about the metaverse, we have a massive gap from here to here, which is basically from 250 to 290. So at some point in the future, I don't know when this is going to get filled, but Meta's going back to around $300. I don't know if it's happening today, tomorrow, a week from now, 6 months from now, but this is going to happen, people. Okay. Meta's a good business and they print money. So eventually it's going to be in the 300s again. And then everybody's going to say, oh, I should have bought Meta. I should have held that stock. And so I don't want to be part of those people wishing I did hold it. I'm just going to hold it.
Yeah. I think one of Berkshire's lieutenants actually sold out of Meta too.
I'm out.
Yeah. Yeah. No, I'm just saying. No, I'm just saying it's like one of those things that when you see the whales start selling out of positions and buying into positions, it's something to keep in mind. Like one of the reasons why I ended up buying Meta too was because I saw a lot of interest from hedge funds adding to their Meta positions.
They were buying a lot. Yes, they were.
Now what's funny is now they're all adding Amazon.
And Google.
So the 2 that we have, like we're very bullish on, are both being added significantly by hedge funds. And I mean, it's, you know what it is? It's a flight to quality, right? These companies are still very healthy businesses. They're still generating cash flow. Not as much for Amazon's sake, but they're making the capex cuts to make sure that they can grow their cash flow going forward. So I think all of that stuff is going to be reflected in the share price, you know, sooner rather than later. But you know, Google, on the other hand, Google's got like a existential war going on with Microsoft. So they're on like another level of, hey, let's start kicking, you know, products out. Like whatever they were holding back on, they're not holding back anymore. And I'm curious to see the newer products that are coming out. Did you guys see the new thing today with the pass keys?
No.
Google, yeah, Sundar just he tweeted on Twitter today about Google introducing something called passkeys, where now you have like passwordless entry into your multiple devices and stuff, and you can use certain things. So like my MacBook, I'm actually able to like log into all my Google stuff right from my MacBook using my fingerprint, because I have a fingerprint sensor on there. So it's kind of interesting because, you know, before they weren't doing as much of it seemed like they had kind of taken the soft step, like they were just being very cautious with everything. Now Google's seeing that there's an existential threat. They've got Larry and Sergey back at the campuses too, by the way, cooking up different things that they're going to work on. So hopefully that'll like boost up Google. So I think, I think, hopefully we see that.
It's Chamath Palihapitiya. Say it with me.
I'm actually messing around.
Palihapitiya.
Chamath Palihapitiya. So he actually had a good point on the All In podcast, if you remember. Don't shake your head at me. So he had a good point about the fact that these companies, and we talked about this briefly too, that they don't really innovate anymore in the same way, besides being able to acquire a company. And we talked about Meta buying Oculus and all that, and Instagram. But Google, like, when was the last thing they did anything
big
great?
Drink, Kris.
He's getting wasted. But when is the last time Google did anything of like super importance? And Chamath did have a good point about like, okay, maybe we had Gmail or something like that, but that was like a long time ago.
Yeah, he was saying the 2000s calendar, Gmail, but since the 2010s, nothing.
Microsoft was, yes, that was in the 90s, maybe Windows 95. That was the big thing. What about Apple? Apple had the iPhone in 2006, 2007, but these companies, and don't say the iWatch, that's not.
No. The thing that Google ended up focusing on is, remember, they created their whole cloud division in that time, but they weren't even really like too concerned with it, you know. So they were the runt of the litter when it came to their cloud product,
which is crazy, right?
Yeah, which is super.
They let a bookseller beat them in cloud.
Yeah,
so crazy,
which is
crazy.
Yeah. But you know, that's the key right now. They're investing in that. They're growing too. They're like, Amazon had a growth rate for AWS of about, I think, 16% last quarter. Mm-hmm. Google had a much higher growth rate, right? Which means that they can cover a lot more ground to get back in. And remember, the pie is also growing. So I think Google right now is just doing the same thing that some of the other bigger guys are doing, which is finding the value that they have in their core businesses and some of their tertiary stuff, and just investing in those to grow the pie. Because now they realize that if we don't release product, we're gonna fall behind. If we fall behind, we're gonna get stuck in this cycle of like a downward spiral where we'll literally be a value company.
Become AOL.
Exactly, become AOL.
All right, let's move on to another topic. Before I got the timestamp.
Boom, so, George, look at this.
Hey, George,
man, George gave 25 last night, bro. I appreciate it. Good evening.
George, is George the Tesla? He retired on Tesla?
I don't know how George has all this money, but he has it somehow.
He has $20. I don't know how George got this 20.
SoFi, though. I don't know.
Good. Well, read it. Read the thing.
Good evening. If time allows, would you share your thoughts on the SEC regulation that will require large hedge funds to report significant losses? Okay, so I'll write that down right now in my notes, and we'll get to that right after this FRC discussion. So I'll get to that.
Yeah.
Apurva, hello everyone. Good morning. Good morning, Apurva from India. It's awesome. You're starting your morning with us. Now, the Federal Reserve decided to raise interest rates by 25 basis points today. And the stock market rallied on that, and then it fell as Jerome started talking. What was interesting to me is that two regional banks, one is Western Alliance Bancorp, was down 30% today. Jim Cramer, of course, on April 19th says that is just the best.
Dude, that's it. That's it. I got to invest everything opposite this guy. This is amazing.
That's why they have the inverse thing. And then you got Pac W, Pac West Bancorp was down 54%. So I guess, and of course, a representative sold out of it perfectly and avoided all of the drops because that's what representatives do. Let's start off with Vitaly. Any thoughts on these regional banks collapsing and two more hit the dust after FRC, obviously after Silicon Valley Bank? Do you think there is a regional banking contagion in the United States, and should we be really worried about what's going on right now?
I don't know. Look, I didn't live through if you guys sort of remember this news, the 80s, there was an SNL crisis. I don't know if you remember that.
Yeah,
Lots of banks,
savings and loan.
Lots of banks went bankrupt. The country survived. It still moved on. 2008, we had a massive banking crisis, right? We still moved on. I don't think these little banks mean anything. I mean, yes, it's gonna suck for the investors if they're not bailed out. Finally, investors aren't bailed out, thank God. But we saw the Fed is not going to let the little guy with a depositor not be bailed out. So that they are being bailed out. And doesn't matter how much money was $250,000, be damned. We're going, whatever you had, we're going to cover, basically, right? So I don't think this is an issue. Honestly, don't. And I'm sure more banks will fail because if Jerome is raising rates, he's making it hard for these banks. They're underwater, right? The mark to market, as we learned yesterday. So that's worse for these banks because now they have to get rid of these terrible deals they made for long-term, right? These long-term duration bonds that they have or whatever they're using. So my point is that they don't matter. So I don't know why we have to keep talking about these little banks. Tell me when JPM is going to suffer or Citibank.
Kris, do you agree that it doesn't matter these banks collapsing, and ultimately if the business goes to JPM, it's just not that big of a deal?
So there is definitely a contagion risk out there, and depends on which industry that these specific banks were heavily involved with. So, as an example, some of the regional banks, they're heavy lenders to like commercial real estate, right? So what ends up happening is if you have a commercial real estate property that you got a loan from these guys, that you're not, the loan is not due right away. That's not how it works. Like you still have that loan, it just gets sold to another party. Now, when it gets sold to another party, that party is probably just going to hold that loan, collect the interest on it, and then when it comes time to refinance, they won't refinance. They'll just say, sorry, I'm not going to do it. So I think a lot of commercial real estate is in a very difficult position because a lot of them use these smaller regional banks in order to make the loans that they needed to buy up real estate. Now, there's two opportunities here. Number one, not every regional bank suffers from the same problems that these guys did. They don't have necessarily a lot of concentration risk, which these guys did, like FRC and Silicon Valley both had concentration risk in that a lot of their client bases were very wealthy people. And in Silicon Valley's case, mostly VC funds that were dropping money in there. I'm talking about like, these are like $1 million, $2 million, like accounts, or maybe even more actually. So when you look at other regional banks, something like the one that I'm doing a lot of due diligence in right now is Truist. Truist is a combination of, back in the day, SunTrust, which is all over the Southeast, and BB&T.
What's the ticker symbol, Kris?
Truist, I think it's let me see.
Let me type it in.
TCN or something.
Yeah, okay, so you can keep going. I'll find it.
Yeah, so Truist is a combination of two different banks, but they mostly cater towards small businesses. And these small businesses, not like a few 100,000, like you're talking about like a lot of small businesses. Like my brother uses Truist, because he owns a gas station. The thing is, they are very insulated against the risk of huge withdrawals at one time. Like they've just got pre-existing client relationships with these guys. They've built this over decades. So there isn't nearly the amount of like bank run risk that you're going to be running into with companies like Truist. But all the same, everyone right now is selling out of these regional banks because everyone thinks, oh well, regional banks are dead. We should sell all regional banks. So I think this is where you can actually derive some good value. So if you're able to actually recognize some patterns, I haven't done full due diligence yet, so don't think that this is my way of saying you should be buying Truist. All right, I'm just saying that among the shit, usually you're going to find real pieces of gold. And so you wanna look out for those pieces of gold so that this
Well,
way
you
when
didn't answer
things
the
do
question.
change,
You
it'll
you
go
went
up.
straight to your bull thesis on
Mhm.
this little shitty
Yeah.
bank. The
Mhm.
question was, Chris has a
Yeah.
way to just divert to a different topic, usually Weight Watchers, but in this
Mm.
case, it's the new bank that he's researching.
I'm sorry, not everyone wants to fucking buy micro inverters. All right, let's go.
No. Hold on. I'm
Yeah.
saying, but the question was, do you think these two banks or these couple of tiny banks going down, like, is there a cascade effect that's happening, or like we're gonna be fine? Like, the
That will
big
be
banks are
fine.
fine.
We'll be fine.
There's plenty of liquidity in the big banks. They're not going out of
Yeah.
business.
Yeah.
So what does it mean that a couple of small banks that made bad loans and have bad deals, what does that mean for
So
us?
so let's take one step back and say, first of all, they didn't make bad loans. Okay, bad loans is like 2008. That was bad loans. When you lend money to non-credible people, you're not going to see that money come back. That's not,
Right.
they don't have the money to give it back to you. Okay. So just think of that as, hey, we fucked up. We gave the money to the wrong guy. You know, we're not in that same situation. We're in a different kind of environment where they lent out money for too long at a at a too low of a rate.
Like
And
2%,
now,
basically, right?
yeah,
2% for
two-
10
hold on,
years.
two-
If
3,
banks are
4%,
lending at
yeah.
2% and interest rates now are at 5.25, why does
Yeah.
that mean they collapse? What is the logic there?
Because if you mark to market, remember, if you're borrowing money at 5 and you're getting interest at 2 or 3%, you're losing money every single month. Now, where do you come up with the difference? The problem is, the reason why you're having these bank runs in the first place is because all the people that you borrowed money from, they're expecting a 5% return. A year ago, that wasn't the case. The expectation a year ago was literally almost no interest. Why? Because interest rates were super low. So if you were a depositor, you were getting nothing. Right now, Apple is giving you 4.25%. Why would I keep my money with you if you're not giving me interest and this other company is? If SoFi is giving me money, why wouldn't I put my money with SoFi? If I'm giving, so right now there's a competition for short-term capital, and same thing with money markets. Like, you can put your money in Robinhood, and Robinhood just bumped up their interest rate to like
4.65, baby.
Yeah. So why would you want to keep your money in a bank instead of keeping it in something like this that has way more insured?
So let me ask you,
yeah.
is the problem once again, because we talked about this maybe a month ago, is the problem once again that these tiny banks did not do any sort of swaps in order to hedge their risk? Is this the issue?
That's one of them, because it would have cut into their profitability, right? So that's one of the key things. The other thing is, no one in the history of the world could have predicted that the Fed would raise at the rate that they rose. Like, Jay Powell came out and said this is transitory. So they believed him and said, okay, we don't have to worry about it. Jay Powell said it's
that's
transitory.
true. When he said that, they believed him, right?
Yeah. So now they got fucked. They believed Jay Powell. And then Jay Powell said, hey, we're going to do multiple
listen,
raises.
when was the last time you believed a banker and didn't get fucked? Okay.
Yeah,
when was that?
exactly. Well, this is, it's funny that you say that, because I think the same thing's going to happen again. I think right now, Jay Powell came out and said, oh, the banks are fine. Motherfucker, what? They're not fine? Doesn't look like they're fine to me. And then there's bullshit about,
I think he meant
we're not...
the banks we care about are fine.
Yeah.
I think that's what he meant.
The other thing that he said was, oh, we have no plans to cut rates. Motherfuckers already like schemed to cut rates by well, at least the bond market thinks that we're going to start to see rate cuts in probably like September, October, November, December, around
Why
that
do you
time.
think the bond market says that?
Because
it's increasing.
What's because the yields, the 10-year, everyone was buying up 10-year treasuries today. The yields on the 10-year was dropping. You didn't see that?
Well, I know I saw a drop today. 2 years at 3.9.
Yo, you didn't have an alert?
2 years at 3.3, 10 years at 3.9.
If you ever want to see what's going to happen in the future, watch the bond market. The bond market will tell you more. Yeah.
It's probably, look, I'm expecting massive rate drops. Maybe at the end of this year. I'm not saying it's happening immediately, but I think 2024 is going to be a good year. That's what I think.
Mm-hmm. Absolutely.
Especially this Christmas, this holidays. I think we're going to see something that'll be quite spectacular.
Yeah.
Okay. We got to move on to another topic, but before we do that, ladies and gentlemen,
one last thing before you do that.
Killed it, but it's okay. Go ahead.
No, just to preface that, the chances of us going into some really deep shit this summer is still there. Okay. So
Mhm.
yes, we can see a massive recovery in the back half of this year and probably 2024. That does not mean in the short term, when the market is going crazy, we
Yep.
don't see a rundown of maybe 20%. That is a very big possibility. I would say 10% is likely, 20% is unlikely, but it's not off the table of markets crashing down when all of this shit is happening. Because if there is a contagion risk and things start to show up, we got problems. But that's where you just need to make sure that you're hedged and you have some liquidity on the side so you can buy up things on the cheap and then just ride them for the next 10 years when the bull market returns.
And if that
Sorry, go
happens,
ahead.
do you think that would be done by September-ish, but the summer would be a little painful?
You know, so just think of it this way. Do you want to be the Fed Reserve chairman who let 10 banks die on your watch? No. You know, he may seem like he doesn't give a shit, but he gives a
You
shit.
already let 5
Like,
banks die.
yeah, well, no, he's not gonna let more die, man. Otherwise, you're gonna have problems. I know that. I know a lot of people are thinking that this is not a pivot point, but dude, today was definitely a signal, especially the bond market was signaling that this was a pivot. Um, there's no way in hell they're raising any further. This was definitely like the last raise. I think the market is going to adjust. Businesses are going to adjust to their new rate environment, and then we're going to start to see some cuts here and there. So we'll see.
Okay.
Yeah, I think they're done. I agree.
All right. We have another big topic to get to, but before we do that, because we are so unbelievably grateful until this normalizes, we are going to keep doing it. Ladies and gentlemen, we hit 300. We got to ring the bell when we hit 300. 300.
I don't think we got to do that.
340.
Yeah, I don't think so
It's
either.
not average yet. We're not averaging
Yeah,
340.
I don't think we need to do that.
I think we
again.
need a month of averaging 340 or above 300 for me to be like, all right.
Why do you try to turn off the audience? That's what I want to
The
know.
audience was asking for the bell. Literally. Oh, you're saying we're
Look,
gonna
just because one guy's messing with you does not mean you should listen to that one lunatic who wants to mess with the
Someone
whole.
said
The whole
when I was
podcast.
about to do it, and Kris was like, "I have one more thing." They're like, "He cock blocked the fuck out of the bell." That was hilarious. Also, someone called me the Indian Caillou, bro. That was the GOAT comment. No, it's not easy to make Kris laugh. That was Kris actually laughed on that. Okay, so 30 minutes timestamp cowbell. Okay, perfect.
Okay,
All right,
yeah,
here we
yeah.
go.
Put that in there. Put that in the timestamps.
Put that in the timestamp. All right, so here's what I want to do now. Okay, if you're watching this podcast, we are different than other podcasts because look, we come from different walks of life, and some of us know what we're talking about because we know how to do some research. SMCI is a semiconductor play. Christopher Patel was talking about this in the 90s publicly on this pod. He was establishing his position in the 70s. The stock was up 30% today. Well, 28.27%, right? But about 30% in one day. In a world in which banks are collapsing, you got fucking SoFi falling 30% in 2 days. You've got these opportunities that are up 30% in an entire day, which is unbelievable because no one talks about this in the semi space, right? They talk about NVIDIA, AMD, Intel. They don't talk about super microcomputers. I did not buy when Kris said to buy because of whatever reasons I didn't buy.
Dude, you know what? I'm ashamed of you guys because I must have spent like hours just kept sending fucking messages on WhatsApp.
That is true.
Okay. I was like, you guys need to check this out. You guys need to check this out. Check it out. I literally, I'm pretty sure you guys turned your notifications off when I was typing it. I was literally, I was getting frustrated. I was like, these motherfuckers are not talking about it, even though I sent them the information. Please talk about it.
No, see, here's the thing.
Dude, stop putting up that cowbell thing. It's not the
No,
cowbell.
No, I know, but we just need some background to make it nice. I'll make a finance junkies one. I expect Carlos to be here. That's why I don't have a fourth one, but that's the only reason I'm keeping it here. It just makes it a little bit more lively. Here's the thing. When your friend tells you a suggestion, right, about like, oh, check out this music artist, check out this stock, you're kind of just like, it's whatever, right? It's just your friend. Kris, you've proven yourself at this point after 4 or 5 of these in a row. When you send a suggestion now, I think me and Vitaly and Carlos are going to take it a little bit more seriously. Vitaly wants to be high on his pride and nod his head.
I don't know. It's not pride.
I don't have that ego.
It has nothing to do with pride, by the way. It's because if he might have good picks. I'm not saying that. I'm saying, but if I don't do my own research, I don't need to follow every single person who has a good
100%. I'm not saying follow him. I'm just saying it's worth looking at, right? There's some people
and if you guys, if you guys remember, all I did was I didn't sell you guys, hey guys, buy SMCI. I said, look, guys, this is actually a very big play. I sent you all, and I sent you my DD too. I sent you literally the
That's double D,
information
baby.
that I had. So,
So,
yeah.
so here's the question I wanted to have. Okay, we can spend like 5-10 minutes on this, then we can move on. Can you talk about like a 5-step process you went through to uncover SMCI? Like, can you take us from the very basics of what you did and then how you got there? I'm going to take some notes on it and I'm going to open source these notes because I really want to know, like, what is your basic methodology to find these winners? And then what did you see special in SMCI that other people didn't see?
So, all right. So the three things that I typically do when I'm trying to, I have different methodologies for discovering different things or finding different things. In this specific case, I was looking at the space that I want to invest in. Okay, so as you guys know, there's general trends in the market where you see things that you're bullish on. For me, I saw AI. Right, everyone saw AI. It was like, oh my god, AI is the next big thing. Everyone needs to get into AI. Blah blah blah. So I was looking at specifically AI. So I said, look, I want to be in the AI sector. Now, the question is, what side of the AI sector do I want to be on? Do I want to be on the picks and shovel side with hardware, where you have people providing the hardware doing that? So I want to be on like the company side, where I see companies providing value like the Microsoft and the Googles of the world, right? So I chose that, hey, I want to do something more on the hardware side of things. And that's when I started to look at NVIDIA. NVIDIA was to me, it still is very overvalued because it's just crazy PE on it. There's a lot of demand for it. I would never short NVIDIA, never recommend anyone short it. But I was just like, look, I think that I'm taking on a lot of risk investing in NVIDIA. Um, if I invest in NVIDIA and something happens and it doesn't pan out. So then I looked at a lot of the partners that NVIDIA works with, and that's when I discovered there was a small company called Supermicro that primarily works with NVIDIA, AMD, and Intel in developing the hardware necessary to make a lot of this stuff work. So that's when I started to do my due diligence on that, and I saw that the valuation was actually really good. It was a very small play, so a lot of people don't necessarily know them, but they've been featured on things like Linus Tech Tips. If you guys want to go and check them out, I listened to their conference calls. I listened to their annual investor call. I did a due diligence on their balance sheet to see what kind of returns you were getting, what kind of growth rates were out there, and I saw a company with a PE of 5 in an industry that typically does not go that low. So, and then I saw, okay, what are some of the other things about it? Why is it valued at such a low price? And yeah, I just was able to find it, and I was like, okay, it just drew me in, and I was able to. And I actually told my wife too. I bought call options on my wife's Robinhood. She's probably celebrating a little bit today. I told her this morning. I was like, let me see your because she's got a Robinhood. I said, let me see your Robinhood, and she's like, okay. And the pre-market, it was already up like 9%. So I was like, okay, honey, just watch this. Later today is going to shoot up. And so, yeah, I'll probably celebrate with her later this week. Probably go to Dahlonega in Georgia. So,
So when you said it's going to shoot up, did she think you were talking about the stock or something else?
man, come on, keep this
Did that
PG
joke fall
13,
flat?
bro.
That joke fell
Keep
flat.
keep it PG.
That joke fell flat. Damn. Okay. Wait a second. So, was her account looking really nice, like in terms of her Robinhood, like thousands of dollars up, or is it a small play?
Well, I'll know later.
He only
She
put 3
just came
shares in
home.
her account, so she stays humble.
No, he bought call options for her. That's why.
That's good.
Yeah.
Timestamp limit makes a bad joke.
I
Okay.
remember when I bought my wife some XRP. She wasn't too happy about that. That's a shit coin in crypto.
You bought her XRP. Oh
I'm like, honey, this is going to the moon. I promise.
oh my gosh, that's hilarious. That's hilarious. Okay, cool. So if you guys want to know more about Kris, his Twitter is in the description, as is all of our Twitters, because we all interact. We all have some decent takes, hopefully. So you guys can follow him.
You know what,
Twitter.
Kris? In the Freelancer Finance Discord, we'll make a SMCI chat, but we expect you there.
You got to show up every day. You got to talk.
No, the thing is, a lot of these companies are just boring companies. There's not much to talk
Yes.
about every day. Like,
Yeah.
I wish that we could have a very interesting company, but that's not how investing works, where there's always news. A lot of
Sure.
it is just you find a company, you find a product, they do their thing, and then there's news around it, of course, but it's like it's going to be a dead channel for 6 months out of the year. But that's what you want. You don't want a company that's like one day saying they're going to do this and then another day doing this, another day doing that. That's, this is like one of the things with SoFi Weekly. I'm sorry to say this, Amit. Like, how much are you going to keep talking about SoFi Weekly? You're going to run out of topics to talk about,
You're not wrong. I'm not arguing.
Well, this is why this podcast is better. We'll talk about anything, including SMCI.
Yeah, exactly.
Wow. Look, Tanner wants to change it to FinTech Friday, and so we have more topics.
That's terrible. Oh, FinTech Friday with for the SoFi thing. Actually, maybe that is better. Talk about general, Square, PayPal, include them all.
Yeah, I think not only FinTech, but just finance in general. I think one of the most interesting dynamics with everything that's happening right now is the velocity at which money can move.
Call it FinTech junkies.
Yeah. The velocity that people can move money around these days is crazy, man. Like right now, you can take your entire account, open it, and close another one, transfer all the money out of one into another one in like maybe a day, which is crazy. Because if you think about it, the reason why these companies, these regional banks got that killed is because people have such an easy way of now just moving money around and moving it into like things like Robinhood or moving it into SoFi and stuff like that. So FinTech is disrupting a lot of things, and this is one of the things that they're disrupting. I
agree. Okay, so I'm transitioning now. I want to do something we haven't done today, especially since we don't have Carlos. We can try it out. StreamYard is in the chat. Please come on. You can ask a question for a minute. You don't need to have your camera on. After you ask your question, we'll take you off. So if any of the 356 people here want to join, you can join through your phone. It's actually very simple on StreamYard. And ask any question you have.
What are we doing? We're like a call-in show now?
We're a call-in show. So let's see. I mean, bro, people are usually hesitant, so I don't know if anyone's going to take up the offer. But if you have
All right, so this is question Q&A time? Is this what this is?
Now we're going to get to Q&A. So leave your questions in the chat. I want to do one final topic. It might take us 2-3 minutes, then we'll move on. So last topic here, I'm going to transition, timestamp 4140.
Before we move on, we never say this, but I think Kelly's posting. Please check out our Twitter, subscribe to that, hit the like and subscribe right below. It takes you a second, costs you nothing. As most YouTubers say, just hit the like and subscribe, and that's it.
Okay, awesome. All right, we already have someone backstage. Troy, thank you for being here. Troy,
dude, there's only 73 likes. Come on, hit the like and subscribe, 73 people.
Likes. Troy, you're the first one ever on Finance Junkies. I hope you have a good question. So, or any questions.
This is going to be like Baba Booey shit now.
Please don't say anything weird. So here we go. We're trying it out. Boom.
We're monetizing.
What's up, man?
Oh shit! What's up? You got to turn off our speakers.
Yeah, you're on delay.
Yeah, we're on delay. So Troy, what you have to do is turn off the YouTube audio and just turn on your StreamYard audio. You'll hear us in real time, so you don't need to...
I think he left it. I saw it in the chat.
No.
Okay.
What's
going on, Troy? I think he left.
You got to pause your video that you're playing. See, this is the problem with this.
That's okay. It's a little technical. That's all right. It's still really cool to do. We got another one in backstage. All right, we're gonna get to you. So Troy, I'm gonna get to this first person. Turn off your YouTube audio.
Someone has to yell Baba Booey and
no, please don't. Yeah.
How'd you cut your
finger? I have a lot of cuts.
Are you doing the Michael Jackson thing? He wore one.
No, because I told you I do real estate and I get my hands dirty. It's not all sitting at this.
Yo, you're a billionaire and you still get your hands dirty?
What's a billionaire? I wish I was a billionaire. I get my hands dirty. Yeah.
That's why he's a millionaire.
We got someone else on. Timestamp 4319. Anirudh. I'm sorry, I might be saying that wrong. What's up? Welcome.
Hey guys.
Hi there.
Where are you doing?
How's it going, bro?
Hey, you guys do an amazing job, and I just wanted you guys to let you know that Amit, you rock. Kris, you rock, and Vitally, you suck, man.
That's right.
This is what I'm getting. I'm getting a Baba Booey.
I like this. I like this.
Yeah, but hey,
real quick, where are you calling from?
Can you block and Roosh from now on, please?
So, guys, I'm here in Minnesota. I also work in one of the health insurance firms, and I really love the new perspective you guys give about Palantir because I've been one of the very first Palantir investors, and I've been holding the stock since then. And you know what? No matter what, Palantir, I'm like all in on Palantir. Palantir is my only stock right now, which I hold.
I wonder
And
why he doesn't like me.
see, I'll tell you the value proposition of it. Okay, I don't find any
Is this
other
a question or is
company
this like is
as
he
No, let him
pitching
talk.
valuable
Let him
Palantir?
as
talk. Hey, let him
Palantir.
talk. He's got something to say. He owns
All
Palantir.
right.
He might say something smart.
I'm not able to find any other company as valuable as Palantir's value proposition. So literally, I've been searching if there is any other company which can match the value proposition as Palantir. And Amit, I'm sorry to say this, but SoFi sucks too.
Oh yes,
Fair.
there you go.
But
Fair,
still,
man.
like
Fair.
Palantir to the moon.
Palantir to the moon. Okay,
And
so
thank you guys for
Palantir
inviting me.
to the moon. That's
Yeah,
it.
of
All right, that's
course.
awesome, man.
Of course.
Thank you for joining on. People from Minnesota are always so nice. So it's awesome that you were nice. And yeah, thank you for joining. Look, I think Kris and Vitaly obviously disagree with your opinion. They think there's better opportunities.
Yeah. I
I'm not
respect
all
their
in on
opinions
Palantir,
from
but I
their
do think
side.
the
Yeah.
long-term potential.
So just one thing, in the long term, I think you are going to be right. I think there's going to be a lot of return that comes towards you for Palantir. It's just that my investing style, I have a long portfolio, but I also have a short and medium one. So the thing is, for me, if I see other opportunities in the short term, I jump into that. So I think if you're holding for the long term, you believe this is a good company, which it probably is. Good luck. You
See,
know.
my investing standpoint is I'm going to pass on the share to my grandkids, man. So if I'm looking at that,
That's good. They'll
that
still be
view,
worth the same amount. They're gonna
Tally's
enjoy them.
throwing up inside of his throat. I love seeing him react like this because it's so great.
This is so
When it
ridiculous.
happens, it's gonna be awesome. I love it.
and by the way, my YouTube name is Nijam. So I guess you guys know that. And in Twitter, I'm Pablo Emilio Escobar Castao.
You're Pablo Escobar on Twitter?
Yes.
Bro, I've been searching for you forever. That's amazing. That's great. That's awesome.
Yeah, man. I just don't want to deal with all other trollers with my real name. So that's the reason.
I think someone put this as India junkies now.
Yeah, we gotta go
Do you guys want water? Am
Called
I
you
the
White's
water guy?
Tally. That's what he called you. All right, awesome, Ani. Thank you so much for being on. We appreciate it. Thank you for watching the show.
Later.
It means
Yeah,
the world
thanks,
to us,
guys.
man. See ya.
All right, we
Take
need a
care.
Russian. Go ahead. Who's Russian in this in this comments?
All right, Troy. We're in the background. I love it. What's up? What's your question?
What's up, sir?
What's
No,
up?
I love you guys. No, I've been watching y'all forever. Like, I mean, especially you, Fins. God, when you had like 4 followers. So yeah. No, love you guys. Watch every night. I didn't mean to go live or even be a part of this. I'm not.
No, it's good, man. It's
I
good.
made
This is
the
healthy. We
comment
want
of
this.
I watched the ugliest 4 guys on Earth and the other live stream. As you can see, I have a face for radio. So no, I love watching you guys. You do great, Vitaly. I love the work you do. I've actually looked you up on IMDb and all that stuff. I see what
Thanks,
you do.
man. I
I
appreciate
went
that.
to the Art Institute of Atlanta, so I am a cinematographer myself. Red Dragon
Nice.
is what I grew up on and worked on, but I gave up the dream, the shot for the moon. But yeah, now I work in lenses, and I actually make glasses.
Nice.
So I gave up camera lenses for prescription lenses.
So
So
I get it.
like,
It's hard,
that's your daytime job, and so on the side.
that is what I do, 9 to 5. Yes, sir. And I watch you guys the other 90% of my day while I'm at
Wow.
work grinding in a studio in a small cave. So
Wow.
I appreciate
that's
all the
amazing.
content you guys do and put out. I really do.
Thanks, man. Thanks for following
you.
us.
Yeah, Chris, again, create the ETF, dude. I'll put whatever. Like,
Chris ETF.
I'm
Troy,
in
Troy,
it. Financial junkies.
Do you have any question at all, or you just wanted to come stroke our cocktail?
Yeah, I didn't know what I was
Jeez.
clicking on when I joined. So again, yeah, no question whatsoever. Just Amit, love what you do. Chris, appreciate your viewpoint. Vitaly, love your sense of humor, dude. You're the reason I pretty much watch all 3. Y'all mesh so well. I love watching what y'all do.
I'm glad
So
I had
keep up the good
something.
work. I love everything y'all do. So keep it up, and I'm gonna watch every day.
Troy,
Thanks,
means the
man.
world, man. Thanks
Appreciate
for
it.
being on. We'll see you. Appreciate it, man. Means a lot.
Thanks, appreciate
much.
it.
Yeah.
Honestly, thank you.
Basically, Vitaly doesn't know shit about stocks, but he's kind of funny. That's great.
He basically said, "Without me, it's boring show." That's what he said.
That's true.
what he said.
No, but see, Vitaly, look, I recognized your talent a year ago.
You did. He
I
calls me
did.
up one day just to do a side story. When him and his ex-boyfriend, the other Russian, broke up, and basically he's like, "I've got a great idea. Okay, just listen to me. Give me 5 minutes of your time. Listen to me."
You're like,
Okay.
I'm not giving you more money. You're already wasting my 10,000. I don't have more money for you.
I'm like, what do you want? He's like, we should do the cowbell together.
Because I know I told you, I was like, and Vitaly was like, well, I'm not a big YouTuber. Like, I'm like, bro, I don't give a fuck about your following. You're good at TV. Like, you know what it, like, you can talk, right? You can talk finance, talk real estate, and you're funny. You're good. So
Appreciate it. Thank you.
that's awesome. Thank you, Think Real. I picked up 25,000 shares of Palantir this week. Now, remember, Think Real got rich off Tesla, so they can afford to do that. Thank you for the super chat. Super awesome.
I got you.
big
So
purchase.
Think Real is already rich and he's splurging a little bit on Palantir. Okay.
He or she, I actually don't know. So Think Real, you could let us know if you're comfortable with that, but I don't know. But yeah, thank you, man, or girl. I don't know. Appreciate it. Look, I think this section is awesome. We're gonna stop the StreamYards for tonight and we'll go to questions. But I really like this because it's a chance for us to interact with you guys. I mean, Dave Ramsey has kind of built an entire empire off of like having people call in.
We didn't get any questions though.
We didn't get any questions, right? Because sometimes people have to ask questions. But I think the reason Dave Ramsey is relevant is because he gets unique questions. He gets to think on the spot, is to give unique answers. That's more personal finance, not really stocks. And it's fun. It's entertaining because you never know what you're going to get, right?
Kaiser says Vitaly is clearly the villain of this story. Thanks.
That is absolutely the villain of the story.
Appreciate
Okay,
it.
so we'll move on to questions. But yeah, we'll do this, I don't know, maybe every Wednesday or we'll see. But this is super fun. Whoever joins and just hops on, it's super cool. Okay, questions. MELI, earnings were pretty good. Any thoughts on Mercado Libre at all?
So for those who don't know, Mercado Libre is a Amazon version specifically for South America. They're very well run from what I can tell, but I haven't necessarily done a lot of due diligence. I know that there was a time where their valuation had just jumped. They were one of the companies that the Motley Fool was really pushing hard, and so during the run up, they did very well. I know a friend of mine that was like 5x on his Mercado Libre position, but then he also made a ton of money on C. I'm not sure. I'm pretty sure he sold out of both of those positions, but yeah, it's just when markets get irrational, there are businesses that will go crazy in terms of valuation, and you just have to keep your head on a swivel and get out before everyone else does. So, but yeah, Mercado Libre, I think I have to look at it a little bit closer to see how their business is operating. But I do know that they have a significant presence in South America, and they're a good company. So this is not some bullshit company where they're just selling fake, like fake.
They're the Amazon of Latin America. That's what they've been dubbed as for most people.
Yep.
Okay, let's do Nate's question, then we'll go to Apple earnings. 3 individual equities to buy and hold in a Roth IRA for the next 30 years. We've answered this in different variations, but let's get an update on this. Vitaly, we'll start with you.
Well, I think you already know 2 of my 3, so I don't know if this is special. But if I was to pick something different than Enphase and Tesla, I would say Google, Amazon, and to go out there a little bit, Unity, which sounds crazy, but I still have a bull case for Unity in terms of the long tail of where this is going. And so you guys should check it out.
For me, I'd say Microsoft, Tesla, and maybe Adobe. Microsoft has proven itself over the last 50 years that they're able to perform. They've been able to reinvent their business. They're just locked into just so much of the industry. I don't think Microsoft is ever going to go anywhere. So if you're thinking about a 30-year value proposition between dividends and capital appreciation, bro, Microsoft is amazing.
I would think Amazon would have a better return.
Huh?
I think Amazon would have a better return.
I mean, that's to be seen. But like I always have this feeling with Amazon where another competitor, like international competitor or something, because will come along and take and like not let them grow as much anymore.
Microsoft has also reinvented themselves many times. I mean,
well, yes and no. I mean, if you think about it, their core product has always been their Windows and Office suite, which has been growing ever since, and I don't see anyone ever replacing that. And same thing with Adobe. Adobe's just, if you're a creative person, if you're in creative industry, Adobe's just got that entire market cornered.
Especially with the Figma acquisition, right?
Figma, well, I mean, with this new AI feature, they could be a little bit disrupted, but they're coming up with their own AI powered things, and now everything's subscription based. So I'm sure Vitaly, you use Adobe,
right? Firefly.
I do, and Adobe also has a little competition coming in with the Blackmagic makes a program for editors as well, DaVinci Resolve, and that's actually I've started switching to using that because their coloring tools are much better. Plus, their editing is getting good. So Adobe is getting its run for its money with that private company. I don't think it's.
Why don't you have Adobe stock, Vitaly, given you use it so much?
Well, I think I missed the big run up. So if you miss like when they went into the SaaS business, before that it was like you would just buy it. The time was when they changed to SaaS, and I should have known. I should have been keeping track of it, but I didn't. And that was the time to get in. Now I'm not saying there's no upside. I just don't think it's the same upside as before.
Yeah.
Okay.
And Amazon, I think you're ignoring because I know you talk about the ads business. We talk about that, but the reason Amazon has more upside than what's it called, Microsoft, is because they've just started monetizing, one, the ads, but two, I know it's a small portion of there, but they make a lot of hardware products and they're trying to lock people into their own Android ecosystem. And I know it's not that big yet with the Kindle. Well, the Kindle itself is big, but I think if they can get more market share in that respect from Google and from Apple, then I think they're locking them also into their own sort of Android ecosystem to just Amazon products. And they might be able to build off of that. Once again, I don't know where this goes, but even Alexa, where does Alexa go? I have no idea.
Yeah.
Let
me just do my three real quick. I would pick Tesla. Obviously, Palantir. You guys are insane for not picking Palantir over the next 30 years. Like 30 years.
I tried to pick other things.
Legitimately insane for not picking Palantir over 30 years. Last one, ArcG. I would like to have exposure to that genomics fund because I think in 30 years, if synthetic biology and genomic sequencing becomes big, that'll be a big one.
I think Uber. Someone mentioned Uber. In fact, yes, I agree.
Yeah. That's a good one. Uber's a good one.
I have a question lined up, but do you have a specific one you want me to put on?
Yeah, there's actually two things that were directly asked. So with my SLG dividends, I'm just reinvesting them back into SLG. So I'm dripping them. So yeah, I think they're very undervalued right now. To me, it's an easy double, if not a quadruple, and so it's best to just keep using the dividends to just buy more.
Okay, I'm getting a dividend in a couple of days from SLG, and it's super awesome to get a dividend.
Yep.
From, so super dope.
Yep.
Will your Uber thesis change if Amazon buys out Grubhub? I'd imagine it doesn't change. Correct? No. Yeah.
SLG is down to where you bought it. I'm looking at it right now.
It's at 21.
It's 21. I mean, it's not like it's ran up.
Yeah. A lot of the reason why SLG is down is because the exposure to commercial real estate because of this. So as these regional banks went down, a lot of people are expecting like credit quality, like the ability to refinance these buildings is going to be harder. Now everyone is selling off properties, commercial property. So if you look at anything on CNBC, everyone is like, commercial property is dead. Commercial property is dead. But what people are missing out on completely is every one of the people that says commercial property is dead will only say commercial property in San Francisco, Chicago, is gonna be devastated. Blah blah blah. They never mention New York. And then the other thing they never mention is they're like, yeah, these Class B and Class C buildings, they're definitely gonna go out and blah blah blah. And I'm like, yeah, exactly. Class A buildings actually hold a significant premium in this market.
And that's what SLG owns.
Yeah, exactly. So you're not buying like some strip mall buildings like commercial real estate like that. You're not buying some old pre-wartime buildings in New York City or anywhere else. You're buying like the top of the line office space in New York City. That's what you're getting. You're getting fixed long-term contracts with a management team that knows how to perform in markets like this. So yeah, I think if I'm sure Vitaly, you can probably say, like, what do you think? The city's dead from what you're seeing?
No, I don't think so. But I go back to that SLG is a long-term play. It's not a quick sort of thing. So I guess the dividend
retirement account. So yeah.
Well, yeah, the dividend thing is a good thing to hold on because New York is not going anywhere. Every time someone says New York is dead, even during 9/11, it was like dead. Real estate was dead for a year or two. It would have been the smartest thing for you to pick up anything in Manhattan or Brooklyn. Anything. You could have bought anything. I'm not joking. So it's the same thing now. If commercial real estate is dead for a couple of years, okay, so big deal. This company's probably not going bankrupt. But I'm looking at a couple of things. The financials here, just over the last few years, I don't have all of them, but why is the revenue going down from 2019, 1.2 billion, while earnings were increasing, quote unquote, but that could have been juiced. So why was revenue actually falling? 1.2 billion in 2019.
Yeah. They're selling assets. So
for 3 years straight, they were selling assets.
So this is what their business model works like this. They usually will find high quality assets. They'll get into the debt stack by issuing something like mezzanine loans, right? And then they end up becoming the servicer in the building because they've actually know how to manage buildings very well. If there is a problem with the building, where let's say the owners want to get out, they can convert their mezzanine debt to equity position, right? Redevelop the building into a much better building itself, get the tenants to lease it out, and then sell a joint venture partnership. So sell out a portion of the total business in that specific building. Use the capital now to get into more debt stacks in other buildings around the city. So what they were doing is they were reducing down their exposure by actually liquidating some of their assets, not selling out of their buildings completely, but selling joint ventures. So this way they're diversifying their risk, using the capital to save it up on the side, so that this way they don't have nearly as much credit exposure. So they actually have some really high class quality buildings that they own outright right now that they can actually sell a portion as a joint venture. And when they sell that joint venture, they can use that to generate capital so that they can pay off their debt, because that's what happens with REITs, right?
So how much do they have on the books in terms of actual cash?
I think right now close to $1 billion, and especially with liquidity. I have to check. I have to check
cash flow, operating cash flow, balance sheet.
So you think the revenue decline, Chris, really isn't a big deal because it's strategically declining, given what they're doing?
With REITs, you don't look at just total revenue. You look at FFO. That's like or AFFO.
What is FFO?
Free cash flow from operations. So basically, it's like there are certain metrics in real estate that you normally, if you do a regular business, you have to expense out, like depreciation, right? For real estate, you have a caveat for depreciation, but that depreciation does not end up. It looks bad on. Well, it looks like your net income is not as high, but once you add back in depreciation, which is a non-cash expense, you end up generating operating cash flow. That operating cash flow is then used to pay your what is that thing called? Your shareholders. You know.
Okay.
So they actually have 200 million, by the way.
Yeah, and they have liquidity though. They have what is that thing called? Credit lines out there too.
Oh, yeah, I'm sure they do.
Yeah.
But
Okay, someone asked how much to subscribe to Kris Portfolio. It's pretty much on Twitter.
It's $9.99.
No. Follow him on Twitter for free.
I don't do that.
All of the stuff that he
I don't do that.
about. So
I don't do that.
And you're not gonna get his little portfolio, but if he says he's bullish on something, you will see it if you follow him on Twitter.
Yeah.
Please make sure to follow him on Twitter.
By the way, if you lose money, Kris does not reimburse you. Just FYI.
Yeah, Kris doesn't.
He's not giving you back that money, so I wouldn't just follow him blindly, people. Okay.
Yes.
Any of us do not follow anyone blindly.
Follow him on Twitter, but don't follow him blindly into a stock. Even though
that would be really silly. He's like, you would have made a lot of.
Kris, he does this line on Twitter. He's like, moo ha 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 ha. I'm just like, this motherfucker. He gets to brag.
Kelly will follow you blindly into the dark. So
I want to follow him blindly.
SLG pays a dividend monthly. That's the other thing I really like
well, now you've got my attention.
You didn't know that?
I didn't know that actually. I didn't know
that's a big deal. That's why it's
15% right now. Are they cutting it again?
No. They cut it in December, but they're not cutting again. What
was it cut from 15? What was it? 20%? What was it before?
No, it was like you have to look at. I think it was like 32 cents. They cut it down to 27 cents a month per
27 cents a share, man. Not bad.
I mean, that's a big cut, by the way. So these aren't good stats when you cut dividends. So
okay, we haven't talked about crypto in a while. What do you guys think of Coinbase? Bullish on it at these levels?
We've talked about this multiple times, but Coinbase, if I was to buy Coinbase, and I'm interested just a little bit because it's really down, but I think at the end of the year when crypto's been kind of high, it's been doing well right now. Okay. I think there's going to be a massive sell-off into the summer, and usually summer months for crypto are not great, which means Coinbase is probably not going to do great during those months unless crypto has a miraculous recovery somehow and goes higher. So if crypto doesn't go higher, I would not be buying Coinbase at all because they're so interconnected. And at the end of the day, like, why even buy Coinbase? Just buy Bitcoin and Ethereum, and that way you're playing the crypto thing as opposed to playing with this company. Because for the next couple of years, Wall Street will treat it completely like Bitcoin. Bitcoin goes up, Coinbase goes up.
Yeah, but that Wells notice is not looking good for Coinbase at all.
Well, that's what I'm saying. Like right now, it's a shit stonk. But if the bull market returns, I think Coinbase does well. Let me put
Okay.
it this way.
Anyone have thoughts on Cloudflare?
You know,
Besides,
I see them integrated everywhere. I just don't know the value proposition.
Yeah, me either. I mean, I see them everywhere on the internet. We use them in my startup, but I don't know what like a long-term bull case looks like on
I know Kelly hates them. Kelly hates
Yeah, Kelly
Cloudflare.
hates a lot of companies. She's getting hit by a bunch of them. Kris, let's ask you this question. Would you ever be interested in opening up your own fund and controlling other people's money,
No.
trading for them?
No.
No, never. If a rich guy from Saudi comes up to you, says, Kris, seen you on Finance Junkies, respect you. 10 million is 10 pennies to me. Just manage my money. You get a 2%
No.
carry on it.
I couldn't. My investing style does not work. Like
No,
if
it works exactly like a trader. You
No.
fucking know how to be-
Vitaly would be better at something.
I'll take
like
you
this than
10
I
million.
would.
You'll never
for
find me
me-
again.
9 million Enphase, 1 million Tesla.
The
thing is-
done. I made your portfolio.
2%, I'm chilling. Where's my beach?
No. The problem with the portfolio thing, you need to earn the 2%. So you got to do all these trades. So,
But that's what I'm saying. Kris would be perfect. He's in and out of Meta after 5 months.
No,
That's
the problem. You end up running into. First of all, I'd be limited in which companies I could invest in, depending on how much capital I have to put money towards something. The other thing is, I just don't have the personality to manage other people's money. I can do my own. I can tolerate my own risk. I can't tolerate other people's risk. The best I would do is honestly just do some consulting, where if someone asks me like, hey, what
Like
do you think
research.
of this thing? Yeah, I wouldn't mind doing some research for a person, but I don't think I could ever like sit there and just straight
So
up.
if someone
just
comes
like-
tomorrow, they're like, Kris, here's a couple $1,000,000. I want you to open up Kris Patel Research LLC, just like Gordon Johnson has, right? And I just want you to do research exclusively for my firm. Would you quit your job tomorrow and do that?
I don't have the qualifications to do it, so not right now.
No,
Like,
but
I can
Kris,
get on it.
hold on, real quick before you say no. And I know you're very humble. Bill Ackman, at 19 years old, raised $4 million for his first fund. The guy he pitched, I think you know this story. He asked for 500K. He told him his stock picks. The guy said no. Those stocks went to the moon in the next 2 years. He comes back, he gets even more money than 500K. Like, Bill Ackman's not some genius at 20 years old. No one is, right? But he understood a little about the market.
Bill Ackman was connected. He has long, extensive history with being connected into like the
I'm just saying, he was-
higher finance
He
industry.
was 22.
Huh?
He was not qualified at 22 years old.
No. People are forgetting some of these people. They come from like Bill Ackman comes from money. Like you have to have certain connections in that industry also, right? Like I don't have connections to the industry. Like I don't have like a cousin who's going to show me how to manage people's money and all this other stuff. That's just, and like I said, I enjoy this as
you have access
as
to
a
meet
side
Kevin.
yeah, I don't want to be. Look, I don't want to be Meet Kevin. All right, like I was trying to find the FOMC stream today, and I saw Meet Kevin was on there. Okay, and I kid you not, dude, 5 minutes in, I was just like, man, come on, Kevin. Like every other sentence was, hey, I'm creating this new program that you can subscribe to, blah blah. And I was like, Kev, like you're a multimillionaire and you're still milking people for just a conversation.
As a
Fine.
side note, I have a 10-step program I'm creating. So I want everybody.
How to 20x. Step 1, buy Enphase at $20.
No.
missed
Step
out?
1, pay me $9.99 a month. That's step 1.
Yeah.
That's hilarious. Well, all right, that's interesting.
Step 2, buy Enphase as it heads down, and you're done.
as it heads down.
Relax.
And relax.
Step 3, sell your Palantir.
Believe it or not, Enphase actually is getting to the valuation.
I
that
know
I'm-
these
I'm
people
getting
are like
interested.
shitting it. You know, they're shitting at it on the wrong time. That's the problem.
Yeah,
The right time was when it was $300, and I agreed. When it's
Yeah.
under $150 and it's heading lower, that is the wrong time to shit on a quality company who actually makes money.
Yeah, that's the other thing. Like no company ever goes bankrupt when they're actually making money.
When
Right.
they have money in the bank. That's right.
Yeah, and the industry that they're in is still growing. It's a significant amount of TAM that's there. So no, Enphase is not a bad investment. The only thing is the valuation at 300 was definitely a stretch. So I always said like 150 was like the level that I would get very curious and very interested in. But based on what you said yesterday, that's the only reason why I didn't pull a trigger on it. Maybe I'll wait a little bit, 1 or 2 quarters for the numbers to start getting a little
I
bit
think
back to where they were.
waiting that long, I think we're going to hit a bottom. If it keeps moving this fast down, we're going to
Yeah.
hit a bottom sooner than most people expect. And then
Yeah.
quarter 2 is already priced in. That's what I think is
Yeah.
happening. So yes, I have buys at 133 and 110. I do have those buys, but I'm buying at 150, 140, 130. I'm buying all the way down. So just FYI.
Yeah.
Okay,
There's one
Go ahead, Kris.
there's one thing with SLG. SLG, one of the things that I see sometimes on Seeking Alpha and all those, oh, they have exposure to this, they have exposure. Like my brother just sent me an article about SLG has exposure to First Republic because they said, oh, well, First Republic leases office space from SLG. That means that SLG is going to go down. And that's not how real estate works. Like, number one, they got bought out by JP Morgan. So now JP Morgan is on the leasing hook, right? It's not like SLG. I mean, what is that thing called? FRC declared bankruptcy and now their leases are void. They just got bought out. So what does this mean now? That means that JP Morgan has to pay SLG in order to maintain those offices. If they don't want to, they can break away, but they have to pay a giant breakup fee. That's how commercial real estate lending works. Like, you sign a lease for this many years, you're going to have to honor that lease. And if you don't honor it, you're going to have to break up and you're going to have to pay upfront capital for it. Same thing that happened with like Meta, Google, all of them. They have real estate in the city. So everyone's like, oh, they're going to cut back on their real estate. And it's like, yeah, but that also means that these other companies are going to get paid out for the breakup fees. The other really cool thing is a lot of companies are doing RTO. A lot of companies are doing return to office.
RTO?
Return to office.
Return to office. Okay.
Yeah.
Gotcha.
Like Amazon today had their first day where they were like fully like get back into the office. So
Get your asses back to working for Bezos. I love it.
Well, Jassy, but okay. So
no, Bezos still the executive chairman, right? He's
yeah. And the other thing is like New York City. I think just based on the data that I'm seeing, 70% of the traffic that was going into the city is back. So you're seeing a lot of people in their leasing pipeline start to adopt more leasing space in New York City while the rent is still somewhat cheap. So yeah.
Okay, this comment says Vitaly only likes stocks that go down, which is why he doesn't like Palantir. It can only go up from here.
That's the time to buy them, by the way, when they go down. I think
he's making a joke about Palantir.
I know, I get the joke. Don't worry about it. There's a thing going around where Enphase is good. I'll buy at 75. I think Arlie said 75 bottom, or someone said that. I think Arlie said it. The thing about just investments, just to point this out, you can never time a bottom. So I don't know who these Nostradamuses are in the comments section that can time some sort of a bottom. You're supposed to buy into quality as it's just heading down. That's it. Yeah. That's the secret. There's no other secret. Okay. You just keep buying it as it's going down because you have a long-term thesis on it. If you're trying to actually time a certain number, it's idiotic. I've never hit a certain number. It's almost impossible.
Bro, real quick side thing, and then Kris, you can go. When Nostradamus said the world was ending in 2012, I really believe that shit, bro. I was scared out my ass in 2011. I'm just saying. All right, Kris, go ahead.
Yeah. No, someone was asking about Vornado. Vornado is actually really good too. That's like one of the really that's a big New York City.
Did you buy that
as well?
Did you buy
not yet. I was about to, but then like they ended up pausing their dividend. So they didn't cancel their dividend. They paused it. So a lot of people were just, oh my God, they canceled or suspended their dividend. No,
I think Disney paused their dividends and it's not back.
Yeah. Hey, this one, Vornado, is actually, it's a REIT, so it has to pay out a dividend. But what they're doing is they're pausing their dividend. They're doing a $200 million share buyback. And at the same time, they're going to probably issue the dividends at the end of the year. The other thing that I don't necessarily talk about, because it's not something that's very liquid, is preferred shares. So a lot of companies, they offer preferred shares, which are actually given a really good deal, and it's a lot more safer than investing in the equity, but the upside is also limited. Maybe that's an episode that we can do sometime. Yeah. Have you guys ever invested in preferred equity before? No? Preferred equity is a good way to generate. It's like a hybrid between a bond and a stock, right? Where you can see capital appreciation, but then you can also have some return, and it's a lot more guaranteed because the way that a preferred equity is structured is, if let's say the company is not doing well, they can cancel their dividend. The preferred will end up just like accumulating that interest, right? So it's a fixed interest that you're getting. So a lot of preferred equity.
Let's go deeper into it. We'll talk about that. I would not buy this Vornado Realty Trust, whatever, because I think older buildings will get hit by a tornado. And so that name to me is just not interesting.
There's one other I wouldn't say bad thing about Vornado, but
okay, whatever. Go ahead.
No, Vornado has exposure to San Francisco. They have a building in San Francisco, and they
Oh,
have
so
some
I'm right about
buildings they have some buildings in Chicago as well. So SLG is purely New York City only, which is why I like SLG more than I like Vornado.
I did want to answer. There's a Solar Edge question. Rob H asked, "Can we get Vitaly's take on Vitaly's take on Solar Edge earnings?" I actually didn't listen to the whole thing, but I see that they're up because they beat, and this is actually very interesting. That this is why I said when you buy, it's if you want to hedge, you should buy both because these are it's a duopoly. Solar Edge and Enphase are a duopoly. So if you want it to be safe and you didn't want to pick one winner, these two guys are the clear winners, and it shows you that even when Enphase went down because they're being affected maybe by the US and they have a smaller market, Solar Edge actually has a way bigger market and a more diversified product line. So they're doing better this quarter. I have to go and find out why exactly, but this is exactly why you should buy both.
Okay. Someone asked about Apple earnings and the macro tomorrow. I think we kind of talked about it yesterday, but we all agree Apple's going to go down and S&P might get hit as a result of that when that happens.
Yeah. The Qualcomm numbers are like a telling thing.
Oh
Like,
my
did
God,
you guys see?
Qualcomm,
Why? Why is that a telling thing?
Yeah.
Well, Qualcomm makes the chips that goes inside a lot of these things, like the 5G chips. So they are down.
And
I
inside the
think,
Oculus devices too, by the way.
yeah. So it's like 17% down year over year. So that means that a lot of hardware, like consumer grade hardware, they use these chips. They're probably not going to do well. So I'd say Apple is going to a little
Now,
bit.
what
Well,
I did hear is that they're rumored to be scheduling a $90 billion share buyback tomorrow, and that might hold up the stock a little bit.
Dude, Apple is like this, like holding the fucking entire stock market up. That's what Apple does, you know. Apple and Microsoft are the two fuckers that keep like the QQQ like tethered to where it is. You know, without Microsoft and without Apple, we would have had a 10 to 20% correction. They're literally like the two juggernauts holding the entire index up.
It's crazy that two companies in the world are what control the economy essentially from falling apart. It's unbelievable. It's incredible to see. Absolutely.
Well, it just makes it seem like it's doing better than it is, but the other company still collapsed. So let's not forget.
Yeah.
All right.
Meta still fell to 70% or whatever it fell.
That is correct.
I can't believe people when that fucking thing fell to like $80, people weren't loading the boat.
You know why? People really thought the FUD was that it is the next AOL because user growth was down, engagement was down. But if you dig deep into the numbers from the technical,
you didn't even have to do that. You just said who is replacing them.
Yeah,
that's the question.
It's true.
AOL had a replacement. Do you know what I'm saying?
Absolutely correct. No, that is.
Yeah. And it's kind of the same argument that we're both making right now when it comes to Amazon. Like, what is the Amazon alternative for e-commerce?
Yeah. There is no alternative. I mean, it's ridiculous.
But again, that business is not profitable. So you can't be making.
You keep saying it's not profitable because they don't want it to be profitable. Do you understand?
Yeah, I get it, but until they make it profitable, it's not something you guys are bullish on.
One day they're going to turn this switch, and you're going to see how much free cash flow this company is going to pump out. It's going to go from like 0 to 50 billion. It's going to be ridiculous. They can go profitable anytime they want.
But I mean,
they're smart.
Like,
they're killing Walmart.
How do they turn on the switch? Do they charge more? Like, how do they?
No, they just stop spending on CapEx. That's it.
Stop. That's it. Stop spending. 1 year, stop spending 50 billion free cash flow.
Bezos' whole idea, any money that we make, we are going to reinvest it in the business to make the core product better and better and better. That's why right now, if you look at Amazon, they can do 1 day fucking delivery. I order something now, it's probably going to show up at my doorstep in the morning. That is the crazy level of logistical footprint that Amazon has.
But that's not profitable. That's my point. By the way, I own Amazon, but I'm saying isn't AWS and Prime your
No, but that's the point. That now you're so locked into that Amazon ecosystem that you can actually start extracting value from the other parts of it. So as an example, these third-party sellers. If you want to put your stuff on Amazon, first of all, you got to pay Amazon to store your shit at their warehouse.
They're already doing that. They're already charging them.
No, I know that. Go ahead.
Well, I was going to say it's very easy. Imagine Prime goes up $10 right now for everybody. Are you going to kill your Prime membership now?
Everyone's going to pay. Everyone's going to pay.
Everyone's going to pay. Do you know how much money they're just created out of thin air? It's like when Meta charged the $15 for Instagram users or like power users. Like they just created $6 billion, like just like that. It's the same thing. Amazon has these levers they can pull, and they don't do it yet. It's very interesting. They don't, because they want to just destroy Walmart and Target and all these other places until they already destroyed mom and pop. That's done.
Right.
So now there's like 2 or 3 other players left, and they're just gonna totally crush them.
You know, it's funny. I think people don't realize that one of the biggest heroes of COVID was Amazon. Imagine the world if Amazon wasn't around and we got hit with COVID and people could like the lockdowns were only possible because of companies like Amazon going there, getting people whatever the fuck they needed, groceries. Remember how much groceries were delivered? Like I remember seeing people with masks on just delivering groceries everywhere, you know, delivering stuff at home. Our entire economy was technically saved by Amazon, you know, at the time. And then also with all the hardworking employees of Amazon too, that were doing all the deliveries as well. Same thing with all the food delivery people. Like they really like the US, the fact that we were able to bounce back from this, like the world right now still hasn't bounced back from COVID yet. Like if you look at certain parts of the world, they're still like trying to recover their economy. The US, we didn't skip a beat. That's crazy. You know.
Well,
Okay.
fair points. All right. That is it for us tonight. Thank you. We had a consistent 330 to 340 here the entire night. I think we hit a peak of 369. Really appreciate it. It means the world to us. Please check out links in the descriptions. Please like before you leave this. Subscribe. Everyone's Twitter and YouTubes are in the description. Please subscribe to the Freelance Finance channel. Follow Kris on Twitter for his awesome due diligence and tweets about stocks. Me, Vitaly, everyone's on Twitter. We appreciate you guys. We'll see you tomorrow for our last show of the week. On Thursday, Uber and Shopify, or Shopify and Apple. Kelly might come on, maybe. We'll see. And then we'll see you guys on Sunday night.
All right. Awesome. Thanks, guys.
Thank you, guys. We'll see you tomorrow. Good night.
Later.